Hi everybody, today I'm going to provide you an update on my portfolio as of end of Q1 2023. From this table, you can see that the US and Singapore stock portfolio have a slight negative of less than 1%. However, if I were to add in the dividends collected, actually the whole portfolio is currently making some slight gain. Since the 1st of December 2022 till now, for the 3 months, actually I have increased position in 5 counters. 3 are US stocks and 2 are Singapore counters. So the 3 US stocks are actually Johnson & Johnson, Disney, and Realty Income. And for the Singapore counter will be SGX and Mapletree Pan Asia Commercial Trust. On top of that, SATS have also issued a right issues for them to acquire WFS at $2.20. For this right issues, actually, I have applied in full and also applied for access, as I feel that SATS should be on a path to recovery after the right issues. Before the right issue, I have only 600 shares. So for the right issue, actually, I applied for another 600 shares. But finally, they have allocated me 500 shares. To me, I felt that it is pretty generous. This is currently my 10 SG stocks. This is their holding in the portfolio. And SATS have the highest holding for the Singapore stocks, which is at 4.94%. Slightly less than 5%, as I have almost doubled the SATS quantity due to the right issues. The rest majority will be hover around 3%, which only CapitaLand Ascenders and OCBC had less than 2% holdings. So the total Singapore stocks currently in my portfolio is about 31.71%. Next, we look at my US holding, and the total holding of my 10 US stocks is about 30%. Where Disney have the highest stake, which is 5.15%, as Disney have done 3 purchases since day 1 to today, and thus the weightage is highest. And Nike have the lowest weightage, which is currently at 1.31%. And I'm looking for opportunity to increase my Nike stake when I feel that the timing is right. Visa is the only stocks that I actually have take profit last year. Means that I've sold a portion of Visa shares out to cash out the profit. I still have about 37.8% of cash balance there for me to invest further. And on top of that, for those that are aware that every month I'll inject another $4,000 of cash into the portfolio, and beginning of the month and also mid-month. I will continue to do this until the end of the year when the portfolio have crossed 100,000. And currently, I do not plan to increase the number of holding. So I still maintain at 10 US stocks and 10 Singapore stocks. I found that Singapore stocks or US stocks that's attractive for me to add into my portfolio, I will need to sell off one of the Singapore or US stocks respectively to replace it. This is the chart to show the performance of this portfolio for the past 15 months. This portfolio started in 1st of January 2022. So now it's about, I've been through 5 quarters. The blue line shows the invested capital, where actually I injected 4,000 every month, and the orange line showed the portfolio values. So you can see that as last year is a pretty challenging year, and this portfolio have been constantly either slight profit or most of the time, actually, especially for the second half of last year, it has been constantly on the slight negative side. Until now, March 2023, it has slightly turned positive. And the gray bar is to show you the cash balance that have been holding on a month-by-month basis. So you can see that the percentage of the cash, the lowest I have hold is about 15%, and the highest is actually more than 40%. Going forward, actually my ideal percentage of cash holding will be around 20%. In short, that I will not really fully invested at all time, and to retain certain cash, especially at the current market situation where actually the direction of whether the market, the bottom already over or would there be another bottom is still really an unknown. Of the 20 stocks I invested, for the 10 Singapore stocks, actually all are dividend paying stocks. But due to the COVID-19 situation, SATS, which was a dividend increasing stock before COVID, have stopped dividend payment for more than 2 years. And thus, SATS happen to be the only stocks, Singapore stock I have that do not pay dividends. And for the 10 US stocks, Google or Alphabet never pay dividends all the while. And Disney was also a dividend paying stock before the COVID-19, and they also stopped paying their dividend at this juncture. And so for the 10 US stocks, I have 2 stocks that don't have dividend payout. And for Singapore stocks, I have 1 stock currently do not have any dividend payout. And for the Singapore stock, I currently have 1 stock that do not have any dividend payout. My focus on the portfolio will be focused on stocks that are able to pay dividend on a growing basis, and because that will be actually indirectly result in a long-term price appreciation of the share price. This will show you the dividend payment over the past 15 months. So the blue bar will be the dividends of Singapore stocks. The orange bar will be the dividend of the US stocks. Do take note the dividend for the US stock pay is after 30% withholding tax. That means I'm looking at the net dividend I collected. And the gray bar will be the total dividend collected for the month. You can see that the monthly dividend payout is quite bumpy. Some of the month got good dividend, some month got low dividend. As the main reason is for Singapore stocks, some of the stocks they pay dividend 4 times a year, some pay 2 times a year, and some pay once a year. And thus, the dividend of Singapore stocks will be more bumpy. Whereas compared to US stocks, for example, most of them actually pay about 4 times a year, or some even like realty income pay monthly dividends. But however, the dividend yield for the US stocks actually is pretty low, especially after 30% withholding tax. And thus, you can see the quantum is much lower. But what I want to show you the chart is for longer term basis. You can see that the cumulative dividend I collected from this graph actually is growing. And the portfolio currently able to turn positive despite the stock's value is currently still slightly negative, is because of the dividend collected, and which make the portfolio positive at this juncture. Let's look at the performance of the 20 stocks in the portfolio against the market. First, let's look at the 6 Singapore stocks that I have now against the STI over the past 1 year. And we can see this is the STI. STI actually have past 1 year, actually the return is negative. However, for the 6 Singapore stocks, in fact, 5 of them actually underperform the STI. There's only 1 counter that actually performed better than STI. It also gives me a negative return. Do take note, this return is excluding dividends. This one have dropped more than 32%, and this is SATS, which have a massive drop after they announced that it's a right issues. This one that have outperformed the STI actually is OCBC. What about the 4 REITs I have? Although there is a big sell down in REITs for October 2022, but surprisingly, there are 2 REITs that currently I'm holding actually perform better than the STI, which is actually the Ascender REITs and the Mapletree Pan Asia Commercial Trust. There are 2 REITs that underperform STI is M44U, which is the Mapletree Logistics Trust, and the worst performance of all the 4 REITs come out to be Parkway Life, which actually have a very great track record in the past, which is a dividend growing stocks. I also compare it with the REITs index, since this is the REITs. And of the REITs index, the Parkway Life is actually on par performing with the REITs index, while the other 3 REITs actually have outperformed the REITs index. And now let's look at my US stocks. Of the 10 US stocks, 6 stocks are listed in New York Stock Exchange, and thus I'll plot them against the S&P 500, which you can see is the SPX. The S&P 500 for the past 1 year is also giving a negative returns of more than 10%. And of all the 6 stocks, in fact, 4 of them have actually outperformed the S&P 500. The worst performer actually is Disney, followed by Johnson & Johnson, which underperformed the S&P 500. The best performance actually is PISA, which is the only stocks that give positive return over the past 12 months. And then the other 4 stocks actually listed in NASDAQ, so I want to compare them with S&P 500 and also the NASDAQ index, which you can see the code I put here is called IXIC. As we know that NASDAQ have underperformed the S&P 500, we can see from here. And of the 4 stocks, actually 2 of them outperform the S&P 500 and also the NASDAQ. And Costco actually outperformed or on par with NASDAQ. And Google is the one that is really underperformed the 2 market. But all in all, you can see all the 4 stocks that listed in NASDAQ all give negative returns for the past 12 months. Thus, you can see that the market is pretty tough for the year 2022. And my portfolio was able to turn positive. One of the key reasons is I'm doing progressive investment. and I slowly invest my capital over time and buy the counter along the way. If I were to buy the stocks from day one and hold it for until today, so maybe the losses will be quite a fair bit instead of getting profit from my portfolio. Now let's look at the unit trust portfolios. For the unit trust portfolio, currently is still have some slight losses, about 4%. And these are the 6 unit trusts that I currently hold, and all of them are on the negative side. The only one that come close to being positive actually is the Aberdeen Global Technology Fund. It's the Global Tech Fund. It at one time has turned slightly positive, and now it's as of end of Q1 is negative. The one that loses the most will still be the UOB United Global Quality Growth Fund. But my losses for the unit trust fund have been narrowed. The worst case is some of the unit trust fund last year have been giving me double-digit losses. But as of now, you can see that all the losses have been narrowed and to be single digit. Okay, in fact, some is considered is almost flat. For example, the Aberdeen Global Tech. And for unit trust portfolio, usually I don't hold much cash balance. You can see there's no cash balance. So it's invested at all time. And you can say that it's an aggressive unit trust portfolio as they are invested at all time into equity funds. So there is no bond investment in the unit trust portfolio at this juncture. This is the return sim at inception. As I do a dollar cost averaging on my unit trust on a monthly basis, I will also do an ad hoc top-up investment along the way. So the return sim inception actually is -9%, but the portfolio actually only down about 4% in value. Why is so much lesser? Because of the dollar cost averaging effect. And in fact, actually I have a good month of March where the portfolio actually up 3.91%. This is the performance of the portfolio against my capital invested. From here, you can see my unit trust portfolio since the start of last year, January 2022, on a negative terrain until now. And for my unit trust portfolio, there's only 2 funds that pay dividend. One is FSA Dividend Advantage, which pay dividend quarterly, and the UOB United Global Quality Growth is pay dividend money. But the dividend, I choose to reinvest directly into the portfolio. And currently, I do not have any plans to make any changes to the unit trust fund at this juncture. So I'll still continue to do the money investment, RSP, on the unit trust portfolio, and also may do a ad hoc top-up along the way. And from there, we shall see how this unit trust is going to perform in the next few quarters. That's all on my portfolio updates. Going forward, if there are any more changes or any more adjustments to my portfolio, I will update everyone again through this channel. If you feel that you have benefit from this video, do remember to like, share, and leave your comment below. And also do remember to subscribe to the channel so that you'll be notified on my next video. I shall see you on my next video. Bye bye.